Warning. This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and we got some CPI data yesterday. We went live for the live stream, so hopefully most of you caught that. It's available on replay if you go to the live tab in case you missed it. So today we're going to mention that. We're going to mention a few things around the dates and cycle lows, because really that's where the focus has been moved to. We've had a bunch of cycle lows behind us. We've been enjoying some rallies and some gains, but again, it's that time to head down. Again, the ebb and flow of the market is going to do what it always does. We need to reset and flush out the sentiment, find another cycle low, and then from there, hopefully we can do it all over again. So we've got late enough in some of these cycles, I'm talking about daily cycles here, to start to head for those cycle lows. So I want to put a bit of focus on that today. I've got a few other things. We'll talk about the banana zone as well. So make sure you hit that subscribe button if you're new here, especially because you will be able to see me call out these cycle lows ahead of time, find these cycle lows in real time, and of course get some trade positions on out of those cycle lows. As always, we'll make the stop loss and validation levels public so we can't possibly cheat it. And if you're a level 3 member, we will call the trade out in real time and give you the exact levels for entry and stop loss and all of that kind of thing when I pull the trigger. So kicking things off with a bit of news, Kazakhstan's central bank is apparently exploring selling gold reserves to buy Bitcoin. So that's pretty wild. I should note, I don't expect that to be a theme that persists. In other news, the Federal Reserve has just issued a statement clarifying the banks are about to be able to custody Bitcoin and crypto. So that's pretty big, right? That is pretty big. I think we're slowly but surely moving towards having a tab in your standard banking app for crypto, right? So you maybe have some cash ready to pay bills and that your income gets paid into. You might have a savings account in all various manners. And now perhaps even in the not too distant future, another tab where you can save in crypto, Bitcoin, that kind of thing. Pretty wild times, but it certainly seems to be going that way. In terms of the Camel Finance indicator, we're gradually working our way towards the official launch for the update. There's a bunch of new features available, and one of them is this purple tie indicator for POW. So we continue to build this thing out, continue to try to put the most amount of alpha possible all in one place for you. I'm going to show you some of the updates at the end because they're extremely useful, and this tool just continues to get better and better. So I'm going to show you that as well. Obviously, yesterday, the big news was that we got CPI. It was more or less in line, okay, with forecast, and month over month core coming slightly cold or below the forecast. But really, this was pretty much in line with the Camel Crew's expectations because we were looking at trueflation. We knew this whole counter trend wobble right here had been occurring, and so one or two sticky prints in the coming months, not entirely surprising, followed by hopefully the resumption of disinflation. And again, we've still got another lower high for now. It could change, right? But it hasn't changed yet. And until such time as we get true change and a true breakout above here at the prior all-time highs, or the prior highs, I should say, then this is still very much a disinflationary trend. Obviously, nothing moves in straight lines. But the big tip here is don't be one of those newer investors that zooms in and only looks at this and says sticky inflation and all of that kind of thing, right? Use the data set in totality. It doesn't really matter what the inflation print is because the cycles are down. And when the cycles are down, that means the price action is going to head to those cycle lows irrespective of the news, right? The same piece of data can be interpreted either bullish or bearish by the market, and it's really the cycles that dictate whether we're going up or down. Since the cycles are approaching the end of their bull phase and are heading for cycle lows now, we knew ahead of time that it didn't really matter what this inflation data was. It could have been hot, in line, or cold. Either way, we were going to head for those cycle lows, and that is the power of cycles. With that said, we're looking at about the 22nd of July for the cycle lows. If I quickly pull up this S&P 500 chart and measure out, okay, today is going to be day 35, and we're expecting the cycle to bottom around day 40, plus or minus 10%, okay? So day 39 would be pretty much in the middle of the window, and that would be the 22nd of July. Now, that also happens to align nicely with Bitcoin's half cycle low, day 30, would also be 22nd of July. So the cycles are kind of down until that 22nd-ish time frame. And I believe this is probably going to be one of the narratives that the market uses to explain away the price action after that cycle low. So to be clear, we're expecting the decline into the 22nd time frame. Doesn't have to be really low, doesn't have to be a big crash, okay? Just an orderly walk down into that 22nd just to reset and flush some of that sentiment. Same for the stock market. We've had a big push up, especially off the lows. Time to just have a bit of a pullback, flush and reset the sentiment, get that cycle low around the 22nd, and then the market will find another narrative to explain away the upside price action from these cycles. And I believe that this is probably going to be one of those narratives. So I'll play you this 40-second clip now and you can tell me what you think.
One thing we haven't talked about yet, which is the report from the Treasury Department that's coming out on crypto on July 22nd, which is 180 days after the initial crypto executive order. And I am hearing rumors and believe very strongly that that is going to be a watershed event. And the stablecoin bill is out there in the mix as well. Those two things I think are going to massively change the dynamic in just the next few weeks. And I think a lot of folks who sat back thinking and hoping and praying that this would go away are about to be rolled over by an incredible wave of innovation that's coming from this industry.
So this is why I love cycles so much, because it really doesn't matter, right? This could easily be bullish or bearish, right? But the beauty of cycles is we can kind of discard all of this and let all the uninformed worry about it, right? They can choose their narrative, they can pick their ideology to explain away the price action. But the beauty is the Camel Crew can just sit here and say, well, we're probably going to be slightly down into the 22nd, and then we're going to be up from there. So this is why I think cycles are so powerful. In addition to this thing on the 22nd, we've also got this Genius Act, which is pushing through. I suspect this is probably going to be announced at the same time. It's just how cycles tend to work, right? They just seem to align with these kinds of narratives. So pause your screen and read this if you want, but the too long didn't read is the Genius Act is well on its way, and it is also expected to be timed around the 22nd. As a quick nod to the Camel Crew, the ones that are informed, let's say, notice how Miss Green here voted no for the Genius Act because it does not include a ban on central bank digital currency. So again, if you know, you know, it's far beyond the remit of today's episode to worry about this, but there's plenty of work on the channel. And speaking of if you know, right? If you're one of the daily watchers, then another hat tip to you guys, because Congress is now moving closer to passing a bill that will ban stock trading for members of Congress, right? Their spouses and their children. They are inching towards this now. And if you're unaware of the significance, it's simply been an expectation, not a prerequisite, not a mandatory requirement, simply an expectation of mine that they may well ban Congress from owning stocks into the top. It's a way of framing this thing as ethical, right? They say, oh, it's not fair to the retail investor and to the public that these people get to inside trade stocks and use all their inside information to make a bunch of money. They frame it as like they're doing us a favor. But in reality, what they're really doing is letting themselves out at the top before a big bear market decline and likely a big global recession. Now, if you're wondering whether or not this is just pure conjecture and tinfoil hattery, it kind of is and it kind of isn't, right? But objectively speaking, we saw the exact same thing with the Fed officials right here. They let themselves out at the top. They framed it as if they were doing the general public and me and you a favor, right? They said, well, Fed guys shouldn't be able to trade stocks. They know what's going on with monetary policy and all this inside info. But really what it did was just let those guys out at the top before this bear market decline unfolded. And so again, it was an expectation of mine that we might see something repeat here with Congress, and it certainly seems like we are inching closer to that every single day. It is something I'll be keeping an eye on. Like I said, it doesn't have to happen, but if it does happen at the same time as we've got big blow off top third and final angle breakdowns and we're starting to confirm with failed daily cycles, then I would think that that is probably a good marker for the top before we start to head to those major 4-year cycle lows in 2026. I just want to quickly reiterate once more that I still believe we're in the banana zone. I still believe that this bull run is not going to last very much longer in terms of time, but we've got a lot of ground to cover in terms of price. I also want to use this as a quick moment to say, please keep your situational and contextual awareness. There will be lots of people that once we get in here, will start to talk about no more 4-year cycles, no more bear markets, no more drawdowns bigger than 20 or 30%. BlackRock's never going to allow its clients to lose money on the ETFs, and there'll be all kinds of crazy narratives. In fact, I'm already starting to see them, and I'm sure you guys are too. But just note, the more those kind of ideas proliferate, the more likely it is that we are closer to the ultimate top. Don't allow yourself to get suckered into these narratives and prevent yourself from taking profit before what is likely to be a minimum of a 60% drawdown. I love this from Paul here. I've seen quite a few people doing this. You connect a trend line on the regular scale through all the highs and notice that at the hard right edge, Bitcoin breaking out right here, invalidating or trying to invalidate. I think it's a little bit early to truly invalidate this thing, but it's trying to invalidate the idea that this was going to be the top and we were going to reject off of this resistance line. But I have been quite consistent in saying I actually think for this ultimate top line we should use a logarithmic scale, and if we do this we actually get a number much closer to 300k. So again, I know it kind of seems crazy to a lot of people, especially if this is your first cycle. You can't really comprehend a move like this coming, but I actually think this is quite likely. And again, it would fit with, where is it here? This whole banana zone idea, making all of this 1, 2, 3, 4, and 5. So that extended fifth wave before 1, 2, 3, 4, and then all of this would be the 5, right? So I actually think there's a lot more probability of this happening than most people are willing to entertain. But for me, at least, that's another piece of confidence to say somewhere in that 280 to 300k zone by about September to November of this year would sit pretty right with me. It would be pretty normal and to be expected, especially from a cycle perspective. And then, of course, we can start to look for not only that 4-year cycle low, but the major blow off top left translation and the resumption of the S-curve adoption in the following 4-year cycles to come. This right here is the S&P 500. Notice it had this kind of arc, okay? Then blow off top, huge crash, base, and off it goes, okay? Big resumption of the primary trend. No volatility decay is experienced at the hard right edge here. Same with Nvidia. For a long time, it's like, well, volatility is decaying, blah, 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 blah. We break out, okay, and then volatility returns. Same deal with Apple, okay? Big blow off top, big sort of reaccumulation, crash, whatever you want to call it, and then volatility returns. So volatility decay precedes volatility expansion. And this is what we're seeing with Bitcoin. Right now, the narrative is that each bear market is getting less and less, and each bull market is returning less and less, and that maybe, just maybe, this is going to continue perpetually, right? All the gains have been made from Bitcoin. But I'm actually here to suggest to you, we're going to bust through this thing, come back down into a significant 4-year cycle low, have another left translated blow off top, then spend a bunch of time consolidating in here before ultimately we then move on to the resumption of volatility. And I think the types of gains that we saw back here are likely to come in this neighborhood again. Now, this is quite a few years away, admittedly, but again, this whole thing to me would line up with the S-curve of adoption smoothed out over the next few decades. The last couple of things I want to cover is I'm seeing some interest in divergences. And divergences can persist, and of course, we can have catch-up trades. We're not entirely sure which one's going to play out yet. But what we've got right now, objectively speaking, is in black, we've got the Bitcoin price. And in green, we've got the Google search term for Bitcoin 30-day moving average. Now, what you'll notice is most of the time, these things track, okay? But at the hard right edge, we have got Bitcoin diverging to the upside, whilst Google searches for Bitcoin are declining. So this is a significant divergence. And of course, it begs the question, are the Google trends going to suddenly snap back up as Bitcoin makes higher and higher prices? Are retail going to come flooding back into the market? Or is this going to be one of the first cycles where retail does not come back? Okay, I know that's not a popular idea. It's not even one I necessarily subscribe to. I don't really think retail has ever mattered, especially not as the market cap continues to climb for Bitcoin. But make no mistake about it, this whole divergence right here confirms what we've suspected all along, which is that this is an institutionally driven asset class now. This is for the big boys, the whales, the serious investors, and retail is likely going to suffer from unit bias for a long time, i.e. they're often going to be looking at Bitcoin and saying, well, I'm priced out, right? It's well over 100k now. I can't afford anywhere near to one whole Bitcoin. And then of course that sets up the next question, doesn't it? Does that mean they're going to look for return elsewhere? Are they going to look for the return in things like altcoins? Well, so far you can see the tracking here from the cycle lows for Ethereum. This is Ethereum in red and Bitcoin in black at the top, diverge away. Ethereum so far this cycle has significantly underperformed Bitcoin from the 4-year cycle lows. Bitcoin is closing in on about 700% gain, whilst Ethereum is sat around 250-ish%. So again, it begs the question, right? Is there a massive catch-up trade here? Is Ethereum going to totally smoke Bitcoin's performance over the rest of the year? Can it even catch Bitcoin up and maybe even overtake its performance to finish this 4-year cycle with overperformance relative to Bitcoin? Or is the fact that this is now an institutionally led asset class going to mean Bitcoin continues to be the king and very few things actually end up outperforming it this cycle? And finally, before we get into some charts and hunt those cycle lows, notice how the S&P is into a very interesting area here, and so far is setting up some bearish divergence. Now, I actually don't think this is too severe, right? You can see that before we got the tariff tantrum, this was the 22 bear market, this was the GFC. So historically, this area of technical resistance has acted as kind of like a danger zone and a topping area, but I actually think that this time around, we're probably going to get away with it, at least based on the cycles. Of course, invalidation for this setup is we get a cycle low, lackluster bounce and fail the cycle. As soon as that happens, then we can actually confirm this bearish divergence is for real, and that this trendline resistance did indeed act again as significant resistance and a major topping point. But until such time as that that happens, then I suggest we stay open to all possible outcomes and continue to take this thing one day at a time with a bullish lean until such time as we see those failed daily cycles. So moving into the charts here, like I said, we are approaching that cycle low for the S&P. The new updates for the indicator are almost ready to be completely rolled out. We've now got these new logos that indicate and denote when a cycle low has been invalidated, when the indicator has picked a new low. You can see it's also got the day counter on there, measured from the last low. This little refresh logo tells you that the low has been updated to account for new price action that's developed, such as this half cycle low inversion here. And then you get a check mark to tell you when this low is confirmed. If I turn my replay tool on here and go back a few candles, you'll be able to see how this works in real time. It's also got a confluence level here. Okay, so you'll notice that as this thing thinks the low is in right here, it will give you low, medium, or high in terms of confidence and probability. This is an indication of momentum in the market. And you'll see as this continues to push higher, it changes to high, right? This is a high confidence, high probability cycle low based on the underlying momentum of the market. And then as it continues to push, it will continue to tell you until ultimately it's 100% sure that that has to be the cycle low, and then it will check it off for you. Depending on the amount of momentum in the market and the amount of choppy price action, this thing will take more or less time to make its mind up. Obviously, when we've got a lot of chop and volatility like this, then it will take its time because the price action is choppy and unclear. And to give you another couple of examples here, okay, I'll show you gold. Gold is another one with choppy price action, okay? But notice how it detects the choppy price action well ahead of time, right? It knows that's low, it changes it to mid, then it goes back to low again, okay? So in here, you're getting day-by-day updates that can hint at whether or not this low has momentum behind it, until eventually enough time has elapsed that we can say for certain that absolutely must be the low, and any trade below that low is of course invalidation. To give you one final example, here is the SILJ ETF. This is an example of just how quickly this thing can detect the momentum. So notice as this thing pulls down into a cycle low, and here we go, you'll see it picks the low, and within about 2 or 3 candles it's got very high degree of confidence before ultimately confirming it, and that is because we have a lot of momentum in the market right here, as you can see. So here we go again, another confirmation, and off we go. So this is a couple of examples of how to use this. Of course, you always want to combine it with your actual TA, like trendline breakouts and stuff. But this thing is becoming more and more powerful by the day. It's almost becoming sentient. Of course, we've got the macro data in here, and for the people asking and saying they couldn't see it, you can change the size of this. You can make it even bigger or even smaller than that. So just a sneak peek of what's coming. By the way, for anyone that has already got the update, some of you have got it, some of you haven't. If you go to the members area in the website and go down to indicator tutorial and then scroll down to indicator settings walkthrough, there are things like daily cycles, which will show you exactly how they work, how all the settings work, what they all mean. And there's even videos showing you exactly what they do and how they work and all this kind of thing, so you can easily and quickly understand how to get the most out of this tool. So be sure to go and check that out if you already got it. And as one final plug for this thing, you can use the code at the top to secure a lifetime discount equivalent to about 60%, because once this update launches in a couple of weeks, we are going to double the price. So make sure you use that code at the top. You can try it out risk-free for 2 weeks at no cost to you. And if you like it and you continue to use it, then again, you'll secure that 60% lifetime discount. But as you can see, this thing is very nearly ready to be launched. So we're really excited to bring that to you guys. The last couple of things I want to point out is gold has got a confirmed cycle low, okay, and it's still trading above. So I do wonder if this whole thing is A, B, C, D, E and about to go. We'll see about that. But I think we're getting pretty close now to resetting the weekly cycle as well. And of course for Bitcoin, we're still looking at potentially a little bit of upside here. I wouldn't be surprised to see one quick high and then a flush, but I also wouldn't be surprised if that is the high until we get to that 20-second time frame. Like I said, then we'll look for a half cycle low. I think maybe about 112, 114k, and then it should be resumption of the bull phase. You can also note here that this low is truly confirmed. So the indicator did really well at finding the inversion or the extended cycle, marking it off and running with this new count. So happy with that as well. And so in summary, it seems a lot to me like we've got to be patient until the 22nd, wait for those cycle lows for the S&P 500 and the stock indexes. I also think we've got to apply that same logic to Bitcoin on its way to its half cycle low. Gold probably just needs to continue to go sideways for one more daily cycle, and then I think it should be time to see the precious metals move higher. I know things like silver continue to push up, and of course we're positioned for this via SILJ, so happy days there as well. Can't really complain at the moment if you're part of the Camel Crew. If you're a level 3 member, I'll make you guys a midweek update to talk about the crypto related equities and the other positions we got open as well. Other than that, have a fantastic rest of the week, and I'll be back tomorrow with more daily content. So until then, take care, all the best, cheers, bye.
Camel Finance, he's the man to see, rocking the markets with his contrarian spree. trades like a pro, no fear, no shame, sticking to his guns in his money game.